let's put some thoughts around whether or not the markets are getting it right with the coronavirus in China.
Okay, well, as a starting point here, let's remember about 500,000 people or more around the world die of ordinary influenzas. So this is something new, and health officials will not know exactly what to do with this. So you have to treat it as a potentially difficult thing. It can harm more people in unknown ways. So that creates certain measures, and they take those measures that have real economic effects. So the psychology of possibly having something go wrong causes some disruptions to travel, tourism, and as you see, this has been largely contained to China for now. When we remember issues like SARS back in 2002, 2003, there were significant economic effects, there were market effects, but they were very temporary. And it's very interesting, we were just saying off air about, we're getting more questions now about Wuhan flu than we are about a trade war, which was going to be fundamentally important to shaping the economy over the next couple of years. So I think, again, all of this, will prove temporary. It'll prove a setback largely for Asia markets, which we will think of certainly as an opportunity for a rebound when this is over with.
Conflict in the Middle East, a coronavirus outbreak, the threat of more conflict around the world, slowing economic parts and growth in certain parts of the world. The market doesn't go down. The path of least resistance is to the upside for stocks and markets globally. Tell me I'm wrong. A
couple years of worry about derailing the entire expansion has left a lot of money on the sidelines. We do believe that we will see a rebound in corporate profits. The quarter that we're reporting right now will be a return to growth. We expect manufacturing, trade, industrial activity to all rebound within 2020. Now, the U.S. stock market has gone a long way to discounting that already. That's what a 30% year last year really does. Around the rest of the world, we think confidence is lacking some, but it will come back. And, this particular issue, as I just mentioned, particularly focused in China and Asia, is probably interrupting that rebound. But we think it's coming. The question, again, is for the United States, how much return do you get out of seeing the story that I just told?
After a year like last year, and I want to put that earnings calendar up again because we just showed it to you in the wall. It's going to be a week full of catalysts coming up. It's over 100 S&P 500 individual companies reporting. On that Wednesday and Thursday, we're probably going to get like 30 companies at least each of those days. Right. There's going to be no shortage of headlines and stories coming out. So is this now an earnings-driven market this year, given that the macro has kind of resolved itself?
Yeah, it's where earnings will be late in 2020 into 2021, after a year like last year. The market is looking ahead, typically 6 months. And if it's saying that our earnings estimates for 2Q, 3Q of 2020 are plausible, if we come out with a high enough level at the end of 2019 that those don't look like outrageous growth rates, then it's very possible that just confirming this recovery can get us some more gains. That's where we really think we are. The fact that credit markets, rate markets, are really, really restrained, worried enough that something goes wrong, that we keep interest rates this low, is generally helpful. But I do think that there is a little trouble in the sense that we've seen both rate-sensitive defensive sectors as well as cyclicals run up together. That's been mostly a U.S. story. It's been less pronounced around the rest of the world. We don't think this is going to be a return year, anything like 2019, but just confirming this recovery, getting past the latest worry in the case of the coronavirus, we will have further gains.
Just a couple of seconds left here. Do valuations concern you, especially for the U.S. markets?
I think if we go substantially higher in the U.S. markets, it would be a concern. But with tax rates this low, the corporate tax rate being cut, interest rates this low, we're not at an outrageous level yet.